After another night of heavy falls over in the US, we have seen some buying emerging here in Australia. It is those sectors that were heaviest hit yesterday, which are in the black at the moment. As you can see from this market map behind me, we're seeing some buying in terms of the material stocks, the healthcare stocks, as well as the information technology stocks. In fact, US futures are up 0.6%, pointing to a positive session in the US tonight. One of the things that we are watching are allegations around China being a currency manipulator. We have seen the Chinese currency sliding 9% against the US currency in the last 6 months, and the concerns in the US around devaluation for competitive reasons by China. But reports overnight that US Treasury staff have found that China isn't manipulating currency, and that's crucial ahead of the twice-yearly US currency report, which is expected next week. We could still see Treasury Secretary Mnuchin still go his own way, but if he accepts the reports around the US Treasury findings, that means we likely won't see an escalation of US-China trade war relations. Out tonight will be JP Morgan with its third quarter earnings result. Earnings per share expected at $2.24 US, with revenue of $27.53 billion US. Rising interest rates and strong trading volumes have seen positive earnings surprises in recent quarters for the investment bank. Of course, this is important because it will set the tone for the US session tonight. I think the focus will be back on third quarter earnings season, with a rise of 19.2% in earnings growth expected in terms of third quarter earnings in the US. That would make it the 6 out of 7 quarter of double-digit growth, and earnings growth expected to be the highest out of the energy sector, finance, construction, materials, and tech. In company news here in Australia, we have seen some heavy falls from Nine Entertainment, Fairfax, and Domain, all down over 10%. We've seen updates coming through from those companies ahead of a proposed merger between Nine Entertainment and Fairfax. While Nine Entertainment reiterated guidance for earnings EBITDA of between 280 to 300 million before items, we did see Fairfax saying that it saw a 5% drop in total revenues in FY19. The Australian community media segment was the biggest drag in Australia, and Stuff New Zealand media down 16% in the year to date so far, including the currency impact, and Domain total revenue down 1%, while digital revenue was up by 6%. So all three of these companies coming under pressure with double-digit losses on the market today. But all in all, the Australian market looking better and looking like we may be in for a bounce today.